Well, welcome everybody. My name's Alex McCracken from Silicon Valley Bank in Europe. And in this slot, I will give a quick overview on SVB's thoughts on the state of the technology markets, both on the macro level and then also what we think is the future for European venture capital. Firstly, just a quick statement that all views here are for general informational purposes and not intended as a substitute for professional advice. Firstly, the macro perspective. Everything seems to be very positive. If you look at the forecast by the various central banks of the US, the UK, and obviously the Eurozone, in 2022, everything seems to point to recovery. Positive growth in GDP in all the territories, a moderate level of inflation at around 2%, and a decreasing unemployment rate in all the territories. So generally, a post-pandemic recovery looks on the cards. But of course, the spectre of inflation means that interest rates are likely to rise, although central banks are pointing to a more gradual increase in interest rates, generally in the less than 1 to 1.5% range, so not too dramatic. But of course, there's some correlation between increasing interest rates and the impact on venture capital. So in the top left, you can see over 200 billion of venture capital invested in the US when interest rates were at relative lows at around 1%. But in the past, when interest rates have been a lot higher, of course, venture capital was relatively less. But if you look at the correlation rate, the R-squared rate, the R-squared is around about 0.4. So there is some correlation. And as interest rates do rise, of course, the public investors, the hedge funds, the investment banks that have been pouring money into venture capital may withdraw and seek higher yield in bonds. So there could be a gradual reduction from the 200 billion of VC investment in the US. Although we do note that in contrast to the private equity market, private equity is a lot more correlated to interest rates. So as interest rates rise, relatively less private equity will be invested, or more money will flow into venture capital in contrast to private equity. Other positive signs in the US venture capital ecosystem really is around, yes, increasing GDP, but also the stock market performance is 36% up year on year, as you can see in the top middle. And the volatility index, the VIX, is down 18% in the quarter and 48% down on the year. So investor perception of risk in the public markets is definitely reducing as the pandemic panic recedes. If you look on the bottom, equity fundraising is up 75% year on year in VC. In terms of debt, the increase in levered loan volume up 135% year on year. So increasing loans out generally means less perception of risk by investors. And also liquidity, as you can see in the bottom right, increasing M&A year on year, increasing tech IPOs and SPACs. Generally, very, very positive news in the US tech ecosystem. Just reflecting the IPOs, clearly a record number of IPOs in terms of count, as you can see in the top right in the green, with 625 billion annualized aggregate post valuation at IPO of tech companies. It's a record. And as you can see in the bottom right, the sheer number of logos and the amount raised at exit by IPO, again, a record. All very positive so far in the IPO market. And people often ask, are these IPOs overvalued? And the truth is, a lot of the IPOs pop above the last private round. So you can see the solid green chart represents valuation at IPO versus the dotted lines being last private round. So generally, the solid green bars at IPO exceed the last private round, apart from a handful on the very bottom right. So generally, proceeds realized at IPO positive for late stage investors. So what does it all mean for European venture? Well, we think there's exciting times ahead. Venture capital in Europe is also booming. As you can see in the top right in green, $51 billion was invested in European VC in half one this year, and it's on track to surpass 110 billion for the full year in Europe, which is a record. Now, that is about a third of what we expect the US to be, but this is a dramatic increase for European venture compared to where it was 10 years ago when it was less than 5% of the US amount. As you can see in the bottom right, the number of companies in Europe raising 400-500 million euros plus rounds, even in the billions of round sizes in venture capital raised, in a wide range of sectors, from fintech to food delivery to batteries, in a wide range of countries, from the Nordics to the UK to Spain, an increasing number of unicorns across Europe as well. Very positive news. Onto the unicorns. There's now over 101 private companies, private tech companies valued at more than $1 billion in Europe. It's only increasing as the wall of capital from the US investors, European investors, public markets investors coming into private companies at late stage, all chasing the exits that are there. And as we can see in the bottom right, the unicorns are headquartered across Europe. It used to be 5 years ago that pretty much all the unicorns were in the UK, but now they're across the whole of Europe and in Israel. Again, a diverse ecosystem is building here. We've also seen a number of venture capital backed growth stage companies acquiring other VC backed companies. So this as an exit route now is a very, very real possibility for maybe more of the struggling startups or ones without critical mass are being acquired by better capitalized late stage VC backed companies that have raised 50s or hundreds of millions of venture capital, are able to now acquire a company in a different geography or a company that has a different solution in order to scale. And this is far out surpassing private equity buyouts or corporate M&A. We're also getting IPOs and SPACs in Europe. So as we've seen, the number of IPOs in Europe and Israel grew to, it's about 41 a quarter now, going through 2021. And we've had a number of high profile IPOs in terms of Deliveroo, Trustpilot, Darktrace and others. And we're also seeing European companies de-SPAC in the US, likes of Kazoo and Lilium and Arkit and others, all finding US SPAC homes. Now, of course, the US SPAC formation is much higher in the US, nearly 300 active SPACs chasing deals, but those US shell companies are chasing European targets. So again, a very, very good exit route for European tech companies. And the positives that point to the longevity of the European ecosystem and US venture capital is the sheer amount of dry powder. The amount of dry powder remaining to invest by US VCs is nearly $200 billion. And in Europe, it's nearly $40 billion. So this money has to be invested in tech companies over the next 3, 4, 5 years. And so this points to the survival of the ecosystem. The flywheel will continue to turn because this dry powder has to be invested. And also diversity is improving, which we're pleased to note. So the number of European VC deals with a female co-founder is dramatically increased. So over $11 billion of deals forecast for this year, which is nearly double 2020 and certainly more than double 2019. And the number of female founded or female co-founded companies has increased to over 22% share of the number of VC-backed deals in Europe. So again, very, very positive. Much more to do, of course. We'd love to see that increase to well over 50%. And diversity generally obviously has many flavors, and we're very pleased to note that there are a number of diverse founded funds who are chasing diverse deals and social impact deals. And there's also over 200 female general partners in VC funds across Europe now. So we do think that diversity will improve, and it's a much needed thing to see in the ecosystem. And we do hope that everyone here watching will consider their own impact on the ecosystem and what they will do to improve their own diverse ratios or the companies that they fund. So in summary, global macro seems very positive as we climb out of the pandemic. European tech and US tech ecosystems, I've never seen anything more positive in terms of the amount of funding, the quality of companies being funded, and the exits that are happening. So long may it continue. Thank you.